Hello friends. Today, the RBI announced first monetary policy for FY 22-23. This policy was very crucial as this acts as a setting tone for the policy for the entire year. Key decisions were as follows. Repo and reverse repo rate were unchanged at 4 and 3.35% respectively. SDF, which stands for Standing Deposit Facility, introduced with a rate of 3.575%, which will act as a floor for overnight rates. Through this route, RBI can take uncollateralized money from the banks. MPC decided to remain accommodative while focusing on withdrawal of accommodation to ensure inflation remains within the target going forward while supporting growth. Liquidity normalization process will be a gradual one and probably a multi-year process. There was no exclusive commitment provided for OMO or GSAP. Inflation forecast was revised upwards from 4.5 to 5.7%, while GDP was revised down to 7.2%. The order of priority has changed from growth to inflation. Only relief which was offered was STM limits were hiked from 22 to 23%, and the impact will be seen over the year. Friends, we are living in an extremely unpredictable and uncertain time, which can be seen from the policy outcome and reaction itself. We have been saying that market is pricing in more than what probably RBI may eventually deliver. Still, the movement across the curve was quite a lot. We can still understand the shock value for the shorter end, which we were prepared with. However, long end was a surprise, with 10-year touching 7.12%. What to expect? The steepness of the curve does offers value. However, the accrual effect shall take time to prove its worth. We expect the flattening of the curve to get more momentum as the shorter end of the curve inches up more than the longer end. FRBs have done well and were standing tall while the market fell sharply in price terms and proved that they act well as a hedge in such times. We expect FRB's performance to continue over the course of the tightening cycle. We advise short-term investors to stick to ultra-short strategies or strategies like Kotak Corporate Bond Fund. Long-term investors may look at floating rate, Kotak Bond Fund, Dynamic Bond Fund, or even gilt. Thank you. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.